What's up, YouTube? It's Joe Ketchapalia sitting on the couch making some money investing in fractional real estate online, as usual. Although today I'm doing something a little bit different. You'll notice I'm using Zoom, or maybe you won't notice, but maybe you will. I've got Matt Hintz here, the creator or co-founder of Solomon's Lot. It's one of the sites, if you might have seen my video on it, and maybe not. They're a fractional real estate investing platform. He was nice enough to offer to come on here. He saw, I did a short video and maybe got some stuff wrong. And I'm going to ask him some questions. Hopefully, he can explain what's going on, what his motivation is, and what his background is. But it'll be really clear that I've never done an interview show before, and hopefully, I won't talk over him too much. But Matt, why don't you say hi to everybody?
Yeah, vice versa, right? Hopefully I don't talk over you too much either. No, I think what I was most excited about is finding a channel out there that was talking about fractional real estate. We're a very early startup phase company. We're approaching it a little bit differently. Like yourself, I've had a background in real estate for a little under a decade. And I am excited to, try to explain it and get some feedback on how I can explain the product better to people interested in investing in real estate through the blockchain. So wherever you want to go, I'm happy to talk about and I appreciate you having me on.
Yeah, great. One of the things I'm always approaching this stuff from a real estate perspective because that's where I have some expertise. The blockchain and crypto stuff, I'm really a noob in that, and so I probably won't ask you terribly intelligent questions about that, although I do have a couple. But
Cool.
I'd like to start with really what is when I'm on your site, and if I know you've got a couple deals on there so far. Um, where did it go? I know I had them up earlier. When I'm looking at an investment on here, what am I actually looking at? And I know, I'd like a little bit about the technical aspects. You go into a lot of detail about that, but really
Yeah.
from an economics perspective, what's the deal I'm looking at?
Yeah, for sure. So, have you ever heard of the new products that are coming out that are called home equity agreements or co-investments or um, home equity investments? There's a couple of companies out there offering this product now.
Yeah, but I actually have, and it's interesting you call it new because I think this is something that's
Yeah,
uh
it's having
been
its
it's
second
come
time
and
around.
gone actually as far as I'm concerned. Like it got really popular for
1970s.
yeah, and then but it sort of I think depending on what's going on in the industry as far as rates and how easy lending is, its popularity depends a lot on that. But yeah,
Exactly.
but why don't you give just a quick description of what that is for anybody who doesn't know?
Yeah, so in paper on the contract form, it's called what is called a forward sale and exchange. So essentially, you're forward selling your house in exchange for personal property interest convertible to cash upon a settlement event. So you can think about it as like an equitable conversion. So essentially, what you're saying is, hey, yeah, I'll pay you in advance of the actual sale in exchange for interest in the property at an exchange rate that I set, or I'm willing to invest at. So that's where that discount comes into play. In the industry, that's called an exchange rate. So the best way to think about it is the traditional forward sale and exchange or home equity agreement has in the industry standard a 2x exchange rate, right? So your house is worth 500,000, you get 50,000, they now own 100,000 or 20% of that house. That's what the traditional product is offering. Now they are cost capped, annualized at 20%, right? And the terms for the traditional product are usually around 10 years. So this has traditionally been a great product for hedge funds and pensions, people that don't need the cash flow and are willing to sit on a position for that period of time. It AMs out to, in a regular real estate environment, anywhere between 8 and 12% annualized, and in a inflationary environment, 15 plus. but most homeowners sell in 3 years, right? Um, and so they're looking at making about 60% in 3 years. So it's really a great product for hedge funds looking to make a lot of money, and not the best product for homeowners, but really the only option they have outside of a HELOC or a
Mhm.
second mortgage. In the high rate environment, which you already said, that's kind of hard for these people to get a second mortgage because their income may not qualify them for it. So that's why it was popular in the 70s, because we were going through very similar inflationary environments. Mortgages were very high, and the forward sale started rearing its head. So there's been some articles. I got into this whole thing in 2021 when I was learning about it, saying this is going to reignite the second mortgage industry, the HELOC industry. This is going to
Mhm.
save it. Um, and I said, well, look, that's a crazy exchange rate. If these companies had a secondary market where they could trade in and out of these positions, you probably wouldn't have had to discount so aggressively to the homeowner. And if instead of a 50% discount or a 2x exchange rate, if you shorten the term, well, you can lessen the discount and actually get better returns to the investors. So right now, what our product really works for is homeowners who may have longer days on market than they anticipated, and they're debating whether or not they take that low offer or they wait it out another 30, 45 days. Um, but their debt servicing starting to get to them. They start needing cash. So they're listed at 500. The realtor might say, hey, you know, that $400,000 offer is starting to look pretty good. Maybe we should take it. They only owe 300K. So instead they could say, well, let me sell 10%, which is 50 par value, 50K for
Mhm.
30K. Now they've just discounted their $500,000 house by 20 grand because the weighted discount of that 50 to 30 is only what? Um, Less than 5%. Yeah, about 3.5% discount
Right.
on the whole house, even though the discount on the fraction is 20%. So the upside is tremendous, but because we're weighting that discount on a fraction, it's actually a win-win. And because of the illiquidity, right? Because these investors like yourself are coming on and saying, this is new, right? How do I understand that? You
Mhm.
guys are really in charge of what discount you're willing to buy at and what term, your length you're willing to wait.
Okay. Let me I want to back up a little bit and make sure I am I think and I think you explained it really well, especially to the nerdier segment of the audience, and you know, that it really hits that part of my brain that I enjoy that stuff. But I want to make sure that it's like just really crystal clear, you know, on sort of like that eighth grade reading level where
Right.
you know, most of us live most of the time. Um, so basically, uh, and you know, ignoring the initial discussion about the you know, forward sale stuff, because I think it's correct, and it, you know, I don't think you've said anything wrong, but I think it's maybe a little confusing. But in general, I have a $500,000 house. I've got it listed for sale, so most of them are going to be ones that they're planning to sell. So we're not talking about that sort of 10-year contract that is, you know, sort of what the product is based on. But we're talking about, okay, I'm trying to sell today, but it's not selling quickly. I want to tap into some of my equity. And so, and like, you know, in your example, it's a $500,000 house. I'm going to sell $50,000 or a 10% interest. But for that 10%, I might just get, yeah, and I'm just going to say 25,000. So we can say
Yeah.
it's a 50% discount, right?
Yeah.
And so it's worth it to me to potentially give up, the 25,000 in the future, right? If I could actually sell it for 500,000, uh, and I didn't do this transaction, I'd get that 50,000, but I'm giving up 25,000 in the future so I can get 25,000 today as the homeowner. That's sort of the that's sort of the position that it's putting them in. And that's for someone that just needs that liquidity really, has no other real way to get it, and maybe they're using it to buy or move into their next property. Is your okay, this is an aside, but it's sort of helping to, put the framework on it. Is the typical seller a homeowner that's moving out of the property and it was owner occupied, or do you imagine this is going to be more attractive to flippers who are trying to get some of their liquidity back early?
So we have a tiered model, and something that was unique is obviously like Lofty AI, for example, they're targeting rental properties, which make up about
Right.
10% of the total real estate market. So they're
Yep.
not even tapping 90% of all of the people who really matter.
Yep.
Now, that's not incredibly attractive to the script of, okay, well, when I invest in real estate, I'm either investing in rentals or I'm investing in flips, right? So there was this weird paradigm where we put finished flips on at a discount to subsidize the marketplace. And people are like, oh, well, this is speculative. These are flips. It's like, these are finished flips. So
Right. Right.
we actually try to make it the most risk of like low risk, best product to prove the concept. We think that there are other flippers out there that have very, very nice finished product that would appeal to new investors on the platform. But we also think that when reaching out to realtors, there's plenty of realtors who have clients who are starting to have that conversation, right? And this
Mhm.
product is actually something that can be brokered by agents and realtors because it's an option and it's a listing agreement, right? You're listing and you're originating this position and it's governed by the NAR. If you look
Interesting.
at,
Okay.
yeah, so we can actually go out and say, filter certain days on market um, with properties in dense subdivisions where we know we have a lot of comps and data to support. And we can start saying, hey, realtors, you can get a fee for this product, and you can, so that means you can get a little cash up front and you can help create some longevity. And no way were we like, this is a great way for flippers to access equity. It was more of like we thought that was a good way to kind of hype the product up. Like, hey, now you can actually get returns on flips from guys who bought it at a great deal,
Right.
and they're really subsidizing the market. Most flippers actually wouldn't really want to use this product because they're like, why would I give up my returns? I'm fine.
Right. Right.
But it's a
And
good
that's
little
that's
tip.
where that question is sort of coming from. And so it's basically your, and it makes sense with your description early on too, is you're trying to create a situation where people can invest in the home equity of owner occupants, but but the target scenario is where they already are trying to sell. And that's to create the real goal of that is to create better returns because it's a quicker sale and you get to realize your discount quicker. Is that accurate?
Correct. Your annualized return can be in the 40 to 60% range,
Hmm.
which is not available all the time, but is probably that return that these savvy investors or your avid investors need in order to try something new. It, in my
Right.
opinion, satisfies that risk profile. The
Yeah.
other component, go ahead.
I was going to say that it's 100% accurate. I mean, so I've spent quite a bit of time looking at different fractional real estate investing websites, and one of the things that some of the bigger platforms like your Arrived Homes, I just don't get excited about it because it's such a low return. um why am I going to try something brand new to get basically, S&P level returns, right? Like if I'm going to be going out there and doing something completely different, I want to be compensated for it at least early on, right? And then when the model's more proven, maybe some of that extra profit gets squeezed out of it. But yeah, I mean, if I'm going to be a sort of first mover in the space, I think that's accurate. I mean, you need to have a product that's that's at least, reasonably expected to outperform something that's like a more traditional, like straightforward product. So I think that makes perfect sense.
Well, and on top of that, like we're in tremendous price discovery. And one of the things that happens on arrived is that it gets compressed, right? That's what happens. Cap rates get crunched the more investors and the larger, bigger investors start getting on. So you're competing against guys who are borrowing at the 10-year yield, treasury yield, instead of at the spread on mortgages, right? So like guys like
Right.
you and me, if we were to borrow money, we have to borrow at 8 or 10% for our rental, where some
Right.
like in Dallas, they're borrowing at 4% and they can just receive less money. So yeah, it eventually, I do think that the discounts will go down. I think
Right.
that, you'll
No,
make
I agree. When
less.
when I did some math on it, I was like, oh, this looks like a really good return. But and that is assuming a couple of things that I think about it are accurate. And I want to ask you about a couple of things.
Yeah,
So you're talking about it's a $500,000 house. That's based on appraised value, or are you doing
correct.
appraisals? Okay.
It's
But
a licensed third party appraisal.
and then so that's how you figure out what's the price, what's it worth today. But so I buy that 50, or I buy that 10% interest, the home sells for 400,000. What am I paid out on? Am I paid out based on the 400,000 or based on the appraised
No,
value?
you're paid on the appraised value.
Okay, right.
So
And that was one of the things I misunderstood when I first approached your site.
a
And I
lot of
think you had
people
already,
do.
yeah, and you had
Yeah,
clarified that for me. Um, I'm curious. So one of the things I wanted to do a little bit, okay, I'm on your site. How would I have figured that out without talking to you?
that's a great question. Um, right now, we're learning about what investors need to understand. Now, if you click on Martha, for some reason that license is not there. Um, if you click on if, into the documents,
Oh,
scroll
into the,
down.
okay, let me go back and
You can actually get it from there. Just
oh
scroll
yeah,
down
here.
and then,
Okay.
yep. So there's
Yep.
a documents section that has the forward sale agreement, but
Uh-huh.
there is a certain amount of, sort of understanding what you're investing in that is required. There's not a lot of guys who come necessarily off the street, and we're working on that. I want to make sure that that's expressly understood,
Right.
because a lot of people are like, well, it's, who cares if it appraised for that? What's its true value? Like,
Right,
well,
right. And that was
actually,
my first thought too, especially because you had one, I think it's this one where, it appraised at 270, it's been on the market at 250. It
yep.
made me start to think, wait a minute, am I losing money on my discounted piece already? So,
So, and that one's actually really interesting. So that one was actually an owner buyout where the owner paid back on the appraised value on a
mhm,
successful refinance, even though it didn't sell on the market. So we really want to address that these are detached. You don't have to wait until it sells, right? And that's the
right.
same with the forward sale. A lot of homeowners are treating it somewhat maybe like a longer term bridge loan that they refinance out in the future.
Interesting.
So
Okay.
this is truly like the MLS, but for fractional listings. Yeah,
And so one of the things that my brain starts to wonder about, I was looking at your article. You have a good discussion about, how this is, you're avoiding securities laws. You end up, because you're not doing like the LLC and doing a piece of that.
I
Um,
wouldn't say avoiding.
well,
I,
not
I
avoiding,
hear
but you
it's
you
a
don't
tough
fall
other,
into that bucket that a
right?
lot of people do.
Yeah.
But one of the things that I start to think about is this looks an awful lot like it's just a debt product, um, in the skin of a forward sale, right? Because your return is fixed.
Well, it's
You are
not fixed
using a deed of
because the
trust.
market condition can change, right? So it could have, if, for example, just because the term is shorter, and
Uh-huh.
you're saying it's fixed because we assume that the market's not going to change tremendously by the time the property sells on the market. But if I lengthen that term out
Uh-huh.
to 3, 4, 5 years, it's totally reasonable to assume that in 3 years, this property would appraise for a different amount
Okay, so there is there a new appraisal at the sale?
every year. So that's our model. We reappraise it yearly. Now,
Okay.
obviously, now I think that in a contest, someone could request a reappraisal.
Uh-huh.
We have not had that yet, but the reason this is not a security is if you study the Securities Act,
Hmm.
it requires that your profit is dependent on the efforts of another. Now,
Right.
I think that Lofty actually doesn't avoid this very well because I think that regardless of whether or not you decentralize your property management, you're still reliant. You're a renter. I've got land. I'm a landlord. I know how important it is that my property manager handles my deferred maintenance, handles my vacancies, and I will tell you that my performance is completely based on my property manager, regardless of whether they're decentralized from my company or not, because most property managers are.
Right.
This is actually because, so there's some really cool stuff that's built in to the forward sale that, again, I did not write or come up with
Right.
that actually shield against, like, let's say I went in and did a $30,000 increased renovation on this property as is. Well, how the
Right.
forward sale works is that's actually deducted from the new appraisal. So if a homeowner goes in and renovates their kitchen, that
Hmm.
doesn't benefit the DAC holders. Now, if I went in and my dog damaged the floors and I caused a bunch of distress and deferred maintenance, that
Uh-huh.
would actually be added on top of the appraisal. So appraisers are able to go in and say what it would have been worth had that not happened on both the positive and the negative, and it
Okay.
balances out to make sure that this is truly based on market conditions.
Got it. Okay. And so that's actually I didn't understand when I had reached out to you before and talked about, is the payout based on the appraisal? I thought we were talking about just the first appraisal. Understanding that you're doing multiple appraisals is and it's on an annual basis. It puts me back into the position of okay, it's a little bit more risky than I thought, right?
Yeah.
Because
Yes.
especially on the ones where, and so, but it pulls me away from worrying about it being debt then, right? So that makes
Yeah.
perfect sense because that's what
There's
it
no
started.
guaranteed return. You're
Right,
investing in the market.
right. And so that's okay. That's definitely a nuance that I was missing because I was like, well, if you're just doing it, if it's always going to be based on that $500,000 return, okay, or value. But so you're saying you're actually taking the market risk. Um, Interesting. And so and then what happens in a situation where, so let's say the homeowner on this Shelby, where it had been at
Mhm.
270, let's say they hadn't refinanced and redeemed.
Yep.
Um, what happens in a situation where this sells? And I think they had like 156,000 in debt or something is what I remember. I
Uh-huh.
could be wrong about that, but what happens in a situation where they sell at a price where once you take out the first mortgage, they don't even have the full 50,000 or whatever it is that they need to pay you back? What happens
Good
there?
luck. Good luck, right? I'm sure you've had your experience with short sales, right?
Yes.
You
Yep.
call that bank and you say, "Hey, we want to accept this offer under what you wrote it at," and they
Right.
say no. So, I've been there so many times.
Yeah. No,
I
I spent a
an
lot of time
80
working with short sales. So,
So we have an 80% LTV underwriting standard. Now that
uh
may be lower for riskier properties, but that 80% includes the entire exchange rate. So in this case, that entire position here, right? 35,000 is just the principal, but the total value is 40,200 or 300 or something.
okay.
So that's would require it to that 80% to include the full 40,000. So essentially, the market would have to actually not yield over 20% of the fair appraised value for it to
Hmm.
break even the profit or the return, and 25 to 30% of the not fair the fair appraised value for it to
Hmm.
actually damage the principal. The principal, it would make no sense if a seller came and called Soul's Lot and said, hey, or the trustee of the deed, hey, we're at the closing table, we need a payoff, and it's under, it's 35% under the appraised value.
Right.
There must have been an insurance claim that needed to be billed, and that would be handled, and that would pay out because it's treated on the accord, just like any other deed of trust.
And so, and I'm going to put this in simple numbers. So I have $100,000 property. There's $60,000 in the first mortgage on it. The
Mm,
most I could sell on your platform is $20,000 worth. And then I would get whatever the discount rate is. So if we're talking about
correct,
the 50%, the most I could pull out in that situation is 10,000.
correct.
Um, but then when I sold, provided my net proceeds are over 80,000, um, there's not a risk there. Okay. Um,
Yeah, it's well buffered, and in some cases, for the $100,000 house, that you very well could only be up to 75% LTV, 70% LTV, because that sounds like a more rural property that I'd be
right.
less confident
Yeah, I'm just using it for
personally
easy
investing.
math. You're right.
Yeah,
I'm
yeah,
just yeah.
yeah,
And especially, yeah, once you get down to really cheap properties, you start to have some of the transaction costs that would make that deal, you'd lose money even if you sold closer to the appraised value.
yeah. You're telling me for sure.
Um, okay, so that makes a lot more sense to me. Let me just go through. I think it's clear why it's not debt because it is you are actually based on your future. Well, so I am curious, why is this the structure that you chose? So when let me give you a background on why I'm asking this question. So, I'm looking at fractional real estate investing platforms because I spend most of my time in my day job helping real estate investors buy properties. When you think of your average real estate investor, they're looking at not just they're looking at four parts of their return, right? They're looking at their cash flow, their debt pay down, their tax benefits, and their appreciation, right? And that's sort of one of the things that I think attracts a lot of people to real estate is, you have multiple ways that you're making money on each deal, and I think it gives you a little bit of protection. But you've honed in on this one piece where if it ends up being longer term, it's really based on just the appreciation piece. But if we're looking at it short term, it's really just based on the structure and the discount.
Discount
Um,
plus appreciation. Yes,
right.
short term, you're not going to benefit from appreciation. Correct.
And so why is this what made this the model that you wanted to go after?
Yeah, I mean, I was solving a problem in my backyard, right? So I started wholesaling real estate, and after I got out of school, I didn't like the model that a lot of people were doing, where you were really just finding finding a homeowner who may not understand the real value of their house, or have such a torn up property that it was actually very hard to value, or you were taking on considerable risk. What I loved was the complex title issues, whether it was, someone was incarcerated and needed to sell, someone had complex tax liens and needed to sell, someone had 15 brothers and sisters that they couldn't locate and needed to sell. And those were the properties that I always worked with. And something that was always interesting to me is I realized, I can figure out how to get clear title on this thing. But it really isn't dependent on the condition of the property. And I've ran into so many homeowners that have beautiful houses, but because they have complex title issues, had to sell at a discount that
Mhm.
was incredibly disfavorable to them. Um, I also had so many homeowners ask, like, can you please just give me a loan, like a balloon loan or something that, like would help me remedy my deceased mother's mortgage so I could list it on with my realtor. And I'm like,
Mhm.
I can't. Because it's just not a product I offered. But I always wished that I could have invested with them, that I didn't have to take all the profit because I was the only guy with cash, and
Mhm.
could just share in the profit with the homeowner by helping them, be able to list the property on the market with a realtor. Because wholesaling wouldn't exist if people were able to just list with a realtor. And the fact that they can't, and I'm not talking about distress sales, because that no one really wants a property that has holes in the ground. Those are fix and flips. Your
Hmm.
wholesalers are looking for a property that's vacant and pretty much move-in ready that they can get at a discount because of some sort of issue or pain point. And this product doesn't work for those people yet, right? Because the risk is still too high and there's not enough liquidity of high grade stuff on this platform. But
Hmm.
once we get there, then we can start offering this product to those people that allow them to save tens of thousands of dollars by being able to list on the market after solving or remedying whatever sort of issue they were in. I'm not, we can't go willy nilly and list those right now, right? That would,
Hmm.
if you logged onto this platform as an investor and you said, this looks like a bunch of distressed real estate,
Right,
it
right.
wouldn't be appealing. But once we have 70, 80% of the platform being backed by really good graded real estate, and then we're able to start introducing this product to home rich cash poor individuals, and we're able to do it with an agent who's dedicated to ethics and the committee to teach them about the value of their house. A lot of homeowners out there don't even understand what equity is. I'd go
Right.
up and knock on a door with the homeowner and I say, hey, how you doing? They're like, I know I got some equity in here. I mean, I don't know what it is. I don't know how much, but I got equity in
Right.
here. And you're
Right.
like able to educate that your home is actually money. But once you can detach the value of the home, it's not debt. Equity is not debt, and
Hmm.
not you're not required to sell it to someone else and move out in order to spend it. Once we can get there, that is what this whole journey has been for me. And that might take 3, 4, 5 years of investors just making a bunch of money on savvy investments. But once we get there, we can open this product up and really democratize the home ownership side, not just the uh, investor side.
Right. Okay. And so I understand it from a product the home seller could need, right? Like, or the homeowner tapping into that equity if there's for some other reason that they can't, especially in a world where the home equity loans just aren't what they used to be.
Right.
I don't know. You said you've been doing real estate for a decade, so you might not have had the joy of being, where I used to buy properties, I would use a 80% first mortgage and a 20% home equity loan to buy properties for 100% financing. That hasn't existed for, I don't know, probably since Dodd-Frank came around. I don't know.
Yeah.
And so, it's creating this situation where there's definitely a need. There's no easy way for, especially the upper part of their equity. Although once you limit it to an 80% LTV, then um, I think there's definitely some competing home equity products that might work, but then you run into, like, you have homeowners that have and I'm just rambling thinking out loud here, but then you have homeowners that run into qualifying issues for that initial additional debt. So that, I mean, I think it makes a lot of sense where you could get people where there'd be a need for the platform from the attracting investors to the site. um is it just that it's providing a good annualized return, or because I don't see the typical real estate investor looking at this and saying, I understand that looks like a real estate investment to me. Let me buy that deal. Do you think that's fair criticism, or is that not really what you've experienced?
Yeah, we understand that this is a novel product. It's
Yep.
a novel product that allowed us to really take a grassroots approach, unlike some of the other large, institutionally backed platforms.
Right.
Now, we are interested in raising capital and would obviously take the same path towards a seed round and all those kind of things. But I think it just allowed us to sprint a lot faster in our what we're not pre-revenue, right? We're not incredibly revenue generating, but we have revenue before even raising capital.
Hmm.
Secondly, the idea of, hey, this is a traditional real estate investment, we understand, is this is not. This
Right.
is quite an exotic equity product. But what
Right.
it is, in my opinion, is true fractional real estate investment. You're
Hmm.
actually being assigned true interest in a forward sale, right? That's
Hmm.
what a digital assignment contract is. You're signing with your wallet signature a contract receiving interest and priority rights in an originated agreement backed by a deed of trust. So we're more of, we want to be the RWA company. You hear about the trend, you Google RWA and it's like, oh, look, here's an RWA token. And you're like, what is this? This is
Hmm.
like a meme coin that they're calling. And it was like, remember when the AI coins came out and everyone's like, oh, you got to buy this AI coin. It's like, what is AI about it? Like, what's actually RWA about Algorand besides, I don't even know. I get that they have some platforms built on there.
Hmm.
Um, for us, this is actually, in my opinion, what fractional real estate investment should feel like because you're actually receiving real rights. It's not some shares. For example, if you invest in a DAO and you're now a shareholder in that DAO, it's an
Hmm.
LLC, Wyoming, whatever, and that LLC gets sued, or you get sued as a member of the LLC,
Hmm.
there's a chance that you affect everyone else as well. You're just a shareholder in a company there. You're not a
Right.
fractional real estate owner. Here, if another DAC holder gets sued, or even the homeowner gets sued, it has nothing to do with the deed of trust. It has nothing to do with your priority rights. If someone else is forced to forfeit their interest in the original agreement, it doesn't affect your interest. You have priority assignment right. And vice versa. The homeowner gets a tax lien. I actually had a homeowner who once received a federal lis pendens and forfeiture of their house, right? And
Hmm.
then my friend who's an attorney, Bob Notestein, here in Nashville, was hired for the private lender as the trustee for the foreclosure, and they submitted to court a motion saying, you want to forfeit this house, but we're going to sell it and we're going to foreclose on it. You can have the proceeds, but we were here before your lis pendens. So a lis pendens forfeiture on a DAO LLC is going to take that whole DAO, right? There's nothing you can really do or say if the LLC is sued. You're part of that suit. Where in this case, you're not. And that's what I believe sovereignty and fractional ownership should actually feel like and look like. We're not trying to invent a product or create something that feels necessarily similar. And that's been a big barrier for us is education. But we are
Right.
dedicated to teaching people about the product.
Interesting. So, I'm not sure I completely agree with the characterization of how it works with, yeah, well, so, and
And
let me
pardon
back
me,
up
yeah,
and,
I'm not an expert on any of the other
and
products.
remind
So
you, I feel like, again, my expertise is on the real estate side, definitely not on the crypto or, the way, so I'm really still a noob on that side, but as far as,
me too, man. Yeah, so I might be very
the,
fanciful.
I think that my rights, in the DAOs are, at least unless I'm misunderstanding, are very similar to owning a piece of the rights as if I owned the whole property, right? So like I own a lot of my real properties in LLCs, and it's as if I just owned, you know, a share of that versus the whole thing. And so I think it is a pretty good analog to owning a piece of it. Now I understand when you're talking about, as far as that's not, my title is just the entity's fee ownership of that title, or lease fee or whatever it is. But it is, I don't know, I think it's pretty analogous, but it could still mean that it has more risk than what your model does, right? Like where you don't have the protection that you just mentioned, as a lien holder, which, it is one of the things, uh back when I, the short time I was involved in real estate law, I'd always rather be a lien holder in a property than an actual owner, right? I mean, I think
Yeah,
that so you're getting some additional protection there,
and
but one of the things that strikes me as different in this, you are a actual you're owning a fraction of the real estate, but you're actually owning just a fraction of one of the benefits of the real estate, right? You're
yes,
not
just
getting
certain rights. You're getting
yes,
rights to the economic appreciation. We call them
right,
fractional property appreciation rights.
right. And so from that perspective, it is less analogous to just owning a piece of the real estate, right? Because it's a piece of one aspect of the like you're not
Exactly.
getting
I'm not
yep,
advertising that you're owning the house, but you are
right.
participating in fractional real estate investment.
Right. And that's I think that's where for me, just when I first approached the site, super difficult for I kind of dumbed my way. It took me a while to figure out what was really going on, and then having a couple questions with you. Um, with that in mind, who is your, and I think when I asked you about investors, you mentioned seed rounds and whatnot, and I don't mean investors in your platform, but who do you see the typical investor being that comes to your site and actually just buys a piece of this discounted interest? What do you think that person looks like?
Yeah, I think that obviously the demographic has been targeted as the avid investor, someone who's actively investing their money on a weekly basis, on a regular basis. Obviously, crypto investors. Um, what we're seeing is a lot of crypto investors are 100% allocated into a meme coin, right?
Yeah,
Which is shocking,
right.
but it's understandable because there's not much else you can invest in. We haven't
Hmm.
really seen the 60/40, 80/20 portfolio strategy yet.
Right.
For example, on Chia, you can buy, which is the L1 stable coin, or not, sorry, L1 coin, like Bitcoin or Ethereum or Algorand. And on Chia, you can buy, because we have our auto offer bot updating every 15 minutes, you can buy at that stable $350 price um, with Chia. Right now, we accept Chia, and other homeowners who come on the platform can choose that. While that may not be very popular, if that is an option, you can hedge against downside of Chia, right? It's very volatile. Like 2 days ago, it went up 20% in a few hours.
Hmm.
If you caught that and then in 15 minutes it dropped 4% and you caught a 4% spread by because it's very hard to sell Chia, you can actually hedge against your crypto portfolio with fractional real estate. So we see that as being very popular. Um,
Interesting.
it's
Okay.
also it's also an on-ramp. It's a safe on-ramp into crypto. So we just integrated fiat where you can purchase these because they are contracts and they're subscription contracts, non-expiring essentially, right? They're digital goods, which means that you can purchase them through Stripe with ACH, which requires some KYC that Stripe does, right? We don't retain that information, but you can do it that way, or you can purchase with stablecoin. So it's a great way to, if you have a certain amount of money sitting in your crypto wallet, you're going to spend it. Come on. No one's just going to keep stablecoin in their crypto wallet.
Hmm.
Um, Going ahead and locking in something into a longer term delayed gratification portfolio strategy like fractional real estate investment is a lot better than putting it all into a meme coin.
Right.
And right, so we think that this is a really good way to kind of give the crypto investors what they've been looking for the whole time, because I think for the past 4 or 5 years, crypto investors have been waiting for the opportunity to make better investments in the stock market, but less
Hmm.
riskier investments in meme coins. And meme coins is almost the byproduct of people not actually coming up with RWA or alternative investments on the blockchain due to the
Right.
regulatory environment of the SEC, you name it. So Avid investors and crypto investors, we think are
Yep.
probably going to be our early adopters. Yeah.
Interesting. Okay. So, and it's actually the opposite of what I thought. So, I really have approached all the fractional real estate from the perspective of which is me, who I am, is okay, a real estate investor who's just looking to get more passive, or, someone who's already gets the investing in real estate model and moving into this. So it makes sense. It makes more sense to me that somebody would move the direction you're talking, right? From meme coins and crypto in this direction. I think it's a harder jump, or it just requires more education for someone coming from the real estate world into here. And that's why I think, when I came here, it took me a while to wrap my head around. Um, I think so. One of the things, and you mentioned Lofty already, that was one of the first fractional sites that I got to.
Yeah.
From I've just really been in the real estate world, and someone from their team actually reached out to me and said, "Hey, we want more actual real estate investors looking at our platform." And looked in, kind of got hooked. Really, it took me a while to understand their model too, because the way they do their debt makes investing on their platform much different from investing in a property in real life as well.
Yeah.
If it has a mortgage on it, if it doesn't, then it's a pretty analogous to just a real world investment. But one of the so the crypto aspect of it was completely lost on me. Like I don't understand that. I've owned some Ethereum for a while. I own a little bit of Bitcoin, but only, to me, that's like buying scratch off tickets. Like,
Yeah.
it's something that I'm putting a little bit of money in. If things go the way that those people think, it's going to turn into a lot, and if not, it didn't really hurt me. I
Yeah. Yeah,
know
for
a lot
sure.
of the crypto people hate it when I say that it's like scratch off tickets, and
Oh,
I
I
think
agree
it's
with you 100%. I 100% agree with you.
um, but so I've also invested on Mogul, which they don't really advertise as much that they're on the blockchain, but they are. I couldn't even tell you what chain they're using.
It could very
Um,
well be a centralized chain too.
yeah, I don't have any idea, but so they're very much just looking for a regular real estate investor to kind of it almost looks like they're just a syndicator with a website, right? Like, I mean, I think
Yeah.
that's what their model looks like. But one of the things that, as a non-crypto native, bothers me about all of these is one, that I don't understand I've read a lot now, and I even bought some Algorand because I've been, every single day I log into a site that uses it. So I said, well, maybe I'll own a little bit of that. But I think having so many different chain options, um, I would love it if there were one that, y- you know, I think if the real estate world of investing wanted to, if they operated on the same. So, for example, if I buy stocks, I can go to any brokerage website and I'm buying the same stocks.
Yeah.
I'd love it if in the future I could buy pieces of your deals on Lofty's marketplace, or if there was another marketplace where I could buy a piece of your deal and some of their deals.
Yeah.
Uh, does being on different chains cause a problem with being able to do that?
I would say that we are big supporters of the one market strategy of Chia. We see
Uh-huh.
that instead of saying you need it on different chains,
Uh-huh.
right? Because we believe in the decentralized marketplace. Like, for example, when you hold your DAX, it's in your wallet, you have the keys.
Yep.
Now, you may have the keys for Lofty's wallet, but it's on their server. And essentially, if their server goes down, well, how are you going to access your wallet unless you export through some complex mechanism?
Well,
Us, you,
so I don't know if you've looked at theirs lately, but a lot of people do actually just own their tokens in their own wallets now. You don't have to
yeah,
use
you can
Lofty's
move them
wallet.
out, correct.
Yeah.
But the model originally incentivizes
Right.
you,
Right.
right. And also Algorand has some centralization features in there too. There's not a ton of nodes. They're very vulnerable to 51% attack, things like that, which I know they've mitigated. I know these are abysmal cases.
Uh-huh.
They require KYC. We do not. And more importantly, I'd love to see rental products like Lofty on SoulSwap, right? It doesn't have to
Yeah.
be the
Okay.
Algorand product. I'd be
Right.
happy to accept Algorand through some smart contracts, but I don't like smart contracts that are centralized counterparty risk, right? When your funds get locked up, who's actually in charge of those funds? Is it a decentralized smart contract on the blockchain, or is it a server in an office for this company? That's called what we call Dino. It's decentralized in name only. So putting stuff on the
Interesting. Okay.
blockchain just to put stuff on the blockchain is a terrible idea.
Right.
But putting stuff on the blockchain to actually protect sovereign rights and property rights and interest to where you actually own the contract in your hands and in your possession, instead of, like, for example, Apple versus FBI, right? FBI comes to Apple, said, we need a backdoor, we need access to this person's iMessages. And they say, no,
Hmm.
sorry, the keys are stored on their phone. We can't decrypt it for you, right?
Right.
Same thing here. Well, if someone called me and they said, hey, I need Joseph Stacks, you need to turn them over to me right now, I'd say, go talk to him.
Right.
Or I need all the properties Stacks. Like, go talk to all the people that own them.
Yep.
We're just like Apple. We don't want to store. We're not a custodian. I don't want to have any sort of construed custodial responsibility for your money and your assets. I
Right.
want you to purchase your rights and own your rights by yourself, and I'm not going to hold them for you. So
Got
we
it.
do see the need for that, but right now we've just made sure that we checked every single box and we didn't exist in any gray area.
Uh-huh.
I'd rather you be able to trade your rental shares for DAX, or swap your DAX for stock, or swap your stock for a coffee at Starbucks. And I
Right.
don't know how much you follow the Chia community, but that's kind of what we're all obsessed with.
Yeah,
Um,
no, no, I don't know it at all. I mean, your platform's the first time, and like I said, I mean, I'd never heard of Algorand until I had been on Lofty for a month, right? Like I didn't
yeah,
know. I'm really, real estate guy, just kind of coming in as a caveman to the crypto world.
that's really
And
cool
it
that you're
is,
doing that.
and I think that it is, um, I think there's so one, I think there's a lot of people like me that are a little bit more scared to move their money into something that has anything to do with crypto. So like I think Mogul is actually kind of smart in that you have to really dig before you even realize that there's some crypto aspect about it. It's really they're just saying, "Hey, buy a piece of this real estate." So I think that to attract people like me, that was a smart move on their part. And over time, I think they start to try to educate a little bit more.
How do you spell that?
Now,
I'm
understanding
pulling it
what
up.
your market is more moving crypto investors into sort of this real estate ownership. I 100% get why. One, it reads like it does because when half the stuff on your site, I don't really get. When
Yeah,
you're because you're you really go into depth on like why this chain is better, why this type of creation is better, not why is this piece of real estate better, right? And so it
yeah.
is. Um, if I and I guess that's a real estate question that I'm curious about. If I came onto your platform, looking at these deals, other than how big of a discount I'm getting, I guess now there is a little bit of a care about the real estate itself. If there's the potential where you're doing, I'm sorry, and I hadn't really formulated a lot of questions about this because I didn't realize that you would do new appraisals each year.
Uh-huh.
Um, if you had a situation where, so the homeowner decides not to sell,
Uh-huh.
um, are you stuck in that is there any point where you can force them to buy you
Yeah,
out?
of course. Yeah. So
Okay.
when you receive rights in
Uh-huh.
the digital assignment contract, Souls Inc. actually retains some last resort settlement rights and enforcement, like
Hmm.
facilitation, to where if it does enter into a bad debt situation, we can obviously enlist a lot more than just a deed of trust. A mortgage can, to try to force the hand of listing the property or demanding a
Hmm.
payout. But worst case scenario, the trustee can be substituted on the deed of trust and foreclosed on the homeowner, just like anyone else. And I'm sure if out of 10,000 properties, you might have three, four, five, 10 of those worst case, right?
Uh-huh.
Um, I don't foresee, and I'm obviously not living by a crystal ball.
Right.
Um, But yeah, it's the same. It's treated just like any other deed of trust with the same sort of enforcement rights after
And
term.
so, and then let me look at it. When you have the details, do you have a time,
Yep,
length of
there is
contract?
there is a term, and it actually I need to add it there. It's in what's called the metadata of the NFT.
Okay.
So I do. Well, I'll add it right under the offering details. It's kind of interesting because we actually put it on the chain, and then we have to put it in the description, kind of in the Web2 world. But this one is an 8-month term.
Got it. Okay.
Now
And
it's
so if it goes past that term, that's when you have the ability to force a sale if you had to.
yeah, and it may increase in value past that term as well. If you went from 8 to 12 months and it reappraised, it may actually appraise for more, may appraise for less. But you're not necessarily objectionably losing if it goes past the term. Now, this property is going to be listed on the market next week. So you're really barring catastrophic scenarios to assume that this wouldn't sell on the market within a $100,000 range of your projected return, because I think the principal is 154,000. So 154 and 40,000 is 194, plus your commission brings you up to maybe 210, max 205. It
Hmm.
appraised for 330. Now, granted,
Right.
I think this one will be listed probably closer to like 290,
Yep.
because there is so much equity, and you know it's not like I think that appraisal was you know very ambitious, but the property obviously looks brand new. So
Right. And that's
um,
one of the things, sorry to cut you off, but it is one of
you're
the
fine.
things that worries me about it is whenever something is appraisal based, I mean, there are, I mean, sometimes you can see just wild, like I sold a property last year. Um, it appraised for 770. There was, or 750 or 770. There's really nothing wrong with it. But the appraisal was so high because the comps were, uh, there, it was just really hard to comp. And it
Mm.
actually sold for, I don't know, maybe 580.
Uh-huh.
Huge delta, right? And it's, but me being in the industry and knowing the property and the neighborhood, I wasn't surprised by that. Um, because it was just like the biggest, nicest home in the neighborhood, and it just wasn't a neighborhood anybody that was going to spend 750 or 800, was going to want to be in. And so,
Yeah, it's like an
um,
outlier.
yeah,
Um,
yeah. And so I get worried about that especially when you have a model like this, if you've got somebody who's got a great appraisal, or a property that appraises high, but they aren't, just know they're not going to be able to sell it. Like that's the sort of scenario where you have some potential for abuse. That's why I'm
yeah,
really
you have
glad
like
to hear you have the 80% LTV thing. I think protects you a lot from that. So, but go ahead.
yeah, and I'm sure as an attorney, the debate between the letter of the law and the spirit of the law, right? It's
Right.
kind of similar, right? Like I agree, there's been an internal debate, like doing some sort of weighted average of a BPO plus an agile valuation from
Hmm.
House Canary plus an appraisal, where the appraisal is weighted at 40%, or and you do this complex algorithm that gives you a much more confident number.
Yep.
Makes more sense, but we're not reinventing the product here. This is
Yeah.
how forward sales are treated in the real world, and it's
Right.
how more mortgages are treated in the real world. So
Yep.
that's we would love to be able to get to a point where people trust us as an authority on an institutional level or a corporate level to have a self-regulating committee to say, right, there's actually a better way than the appraisal. This is
Yeah.
2025. Why are we still using just an appraisal? And I,
Right.
I know that House Canary, Lofty also uses House Canary. And I actually really love Lofty in good competitive spirit.
Hmm.
I'm definitely, you know, looking for everything I can do better, but I love their product. And I
Right.
actually think it's a really cool idea. They also use House Canary, and House Canary has what's called an agile evaluation,
Uh-huh.
where they will send out an inspector to the house, and they will treat it like a BPO on steroids, and they will
Hmm.
give you a confidence indicator. So I have a statistics
Right.
background. I probably wouldn't want to list anything that wasn't within the 97% confidence indicator that this price is that price and it wasn't within a 5% deviation of the appraisal, right?
Right.
So in the case of those ceiling comps, it may raise too much questions internally to say, yeah, I understand it appraised for that much. Maybe we request a second appraisal and we inform the appraiser on our concerns. Um, but maybe we just, sorry, it just doesn't work for our platform, right?
Yeah, no, that's interesting. And so, I guess one of the things that I'm always trying to do with all the platforms is to think about, how can I take some real estate knowledge and expertise, bring it to this platform, and sort of outperform investing on here, right? And so that's where a lot of my
Hmm.
question and thought process is, geared towards. And so then when I start to look at this model, I think it's a little bit hard, right? Because like there's not to evaluate one deal against the next, right? Like we're looking at, okay, what's the discount? That's and then how, I can start to think about, well, how quickly is this one going to sell versus other ones? I can start to think about, I don't have to worry about one of the things I thought I had to worry about was what is it actually going to sell for, but that's not, that's
I
part
mean,
not
it's not as
really,
fun, right? Like, and we
yeah,
want to try to make it more fun. So if you go into that drive link, um, uh, if you don't mind,
yeah, we're
it's your second or third tab to the right. It says Proton Drive. I think you already
oh,
clicked
this
on it.
drive,
Yep.
yeah,
Yep.
okay,
And then you click on the PEXP. So this is exactly what I'm talking about. It's not the agile evaluation report, right?
uh,
So this value estimate based on comps is 322. Obviously old Google Street View, but you can read through a bunch of algorithmic analytics, um, pages and pages of, yeah, like the comp, like how different is this property than the rest?
right,
How, you know, how many sales have occurred? That, you have some sort of information. I'd love to make that more interactive. We are planning on putting like loader bars where you can say, show me all the properties that have a discount more than 12%. Show me all the ones that have an annualized return more than 30%.
right,
And then you're kind of, let's say there were 1,000 on this platform, right? You might know a little bit more about a San Antonio neighborhood than the next guy. And
right,
you might be like, you know what? That 3-year term, I know that property is going to go up the next 3 years, and I know it's going to outperform everything else. We
right,
understand that the fun of investing and the speculative nature that all real estate
yep,
investors really pride themselves in, myself included, is missing from the platform. Once we get liquidity, we'll get there. But again, we're so early, so that's why I'm happy to be able to talk to you. I mean,
right.
we are self-funded. Like, everything has been built from cash that we've invested. We are just now receiving investment. So we hope we absolutely take off from here. But I'm right with you, man. I want to have the thrill of being able to sit at my desk and intellectually trade real estate. That's something that
Right,
excites
right.
me.
Yeah. I mean and that's like my goal is always to like get a little bit of alpha because I know something someone doesn't. And like, real estate in general is just such an inefficient market that it's really easy to do in real life, right? If you
Yeah.
have the capital to buy whole properties. And I think that that's for me the attractive thing of fractional investing is okay, I need a lot less money. I can now go make a lot more of these bets, but I still want to make them, advantaged bets where I know
Correct.
something a little bit more than the next time. But really understanding what you're doing, I don't necessarily think it's um, even though that's exciting for me, if you're more moving crypto investors towards real estate than moving real estate investors towards fractional real estate, you might not. I understand why that's not as forward on the site, right? Like I think that it might not even make sense to really push that angle as much.
Yeah.
Um,
I mean, the angle is in the fact that you're early, right? Like you're pretty
yeah,
much expecting. I mean, if the crazy thing is it doesn't matter how good a return, right? Like I could have discounted this more, and people would be like, oh, that's too good to be true. Like the
Right.
better the discount,
Exactly.
it only reinforces the concern of new people.
Right.
So the only benefit for being early to something is actually that you're taking a little bit more risk because you don't know who's behind it or can you trust this, but you're actually probably profiting more than everyone because you
Mhm.
were early. Like in a year,
Right.
we don't expect these same returns. We don't expect, right? Like most of that stuff will probably get eaten up by guys who made a bunch of money eating it up early on. And they're just now
Mhm.
running bots that are just buying up anything that fits their profile.
Right.
And the sloppy, everything that's lower discount, right? Or you can relist this stuff just like on Lofty is left for the retail guy who's happy with
Oh,
8%
interesting. Okay.
annualized. Yeah. So, and a lot of that's not clear yet. And it's very, very hard to build on the Chia blockchain. We chose
Yeah.
it because that was the most decentralized, most secure one.
Uh-huh.
But yeah, I mean, we move a little bit slower because we didn't take a bunch of grants and get dumped a bunch of hype money on us. I and I'm excited. Um, it's a challenge, right? Like it should be hard, right? Like I'm not here for the money. I'm here to see how much work I can put in and how much I can accomplish.
Right.
Um, but all I can say is the only advantage here is you're early and you're not gonna be able to snipe a better deal than someone else just because there's only good deals right now. That's
Right.
that's the only
Right.
way we can even drive traffic. So yeah. But eventually, yes, you're gonna be having to kind of scan, hopefully the market, there's 100 listings and you're
Hmm.
having to use your bars or your meters, or maybe we have some premium subscription features where you can have a trading desk and
Right.
we reinvent that product
Yeah.
for the retail investor who doesn't have access to institutional product traditionally.
No, it's interesting. So it's definitely I really appreciate you taking the time to go through this and explain it to me.
Yeah.
It's a lot different than my initial impression of it. I think that I definitely see the need, I 100% see the need from the person who's selling their equity, right? Like I think it makes perfect sense that there's going to be some demand on that side. And then yeah, I think on the investor side, it's really just going to be about, is this a way I can make a fairly good risk adjusted return, once I understand, what the product is. And now I have a much better idea of what it is. Um, yeah, I mean, it seems like it's at least the math that I've done on the couple of deals I looked at, they should be good deals, right? Like, I mean, I should be perfectly happy with the money that I'm making there. So that's pretty cool. As far as, I want to wrap it up, but I want to just give you a chance. Is there anything else we didn't talk about that you wanted to share or that you think I should know or anything like that?
I think that my big message is that, and you kind of address it in the beginning, we're here to collaborate with investors like yourself, and knowing what you want makes a huge difference, right? The reason I came on here is because this is free advice for me. It's a great opportunity to get the word out nonetheless, but I gain so much information about what you're needing to see, what you're looking to see, and what makes you feel like this is a safe investment. I think that, I encourage people in the crypto industry, it's so ridden by, the word scam, and people almost just throw it around like it's means nothing.
Right.
And don't be afraid to ask questions and understand that most people, like if you rent and read any fractional real estate platform out there, Joseph, I'm sure you know the feeling. It says scam, scam, scam. This is a scam on any of them, right?
Right. Right.
And that scares a lot of people away.
Yep.
What you're good at and what I recommend the community do is ask questions, right? When you have the opportunity to reach out through to Lofty's chat support or SoulSlot chat support or Joseph or me, shoot us a question, shoot us a DM, comment on the Reddit post, comment on the X post, comment on the YouTube video, and let us know what concerns you have, what you want to see, what we could do better. Because unless we kind of team up with the savvy real estate investors and the savvy crypto guys, we're going to be, we're never going to see eye to eye. And
Right.
we're always going to feel like a scam to the other party. Um, So yeah, I'm just, that's my call to arms message. It's like,
Right.
let's
No,
get
I
together, let's
appreciate
build
that.
something
And it
together.
does create one more question for me. Do you have a Discord channel or somewhere where you've got investors on here and that are talking about it regularly or no?
No, I there's a certain word, oh gosh, that starts with an A that you may know, where you pool a bunch of people together and create somewhat of a echo chamber that I have decided, I'm not going to do. I think at this point it's probably a good idea, right? Like getting a bunch of hype was not my model. Now I understand it's important to share the platform and everything like that, but we don't have any hype channels or anything like that.
Mhm.
I will build out a Discord. Thank you for the suggestion. You can reach me on X. I'm constantly posting articles on there,
Right.
commenting, reposting, engaging with the community. I just started reposting on the r/chia page on Reddit, so you can find me there. I'll open
And
up a Discord.
this is your this is your company's um
Yeah,
X. Do you have what is yours?
Matthew S. Hints.
Yeah, because so
Yep,
just
there's
share
my
that too.
some
Because
community
I know
member.
that's who I think I connected with you first and then your company later.
Yeah, yeah,
Um,
exactly. So I'm a big Chia community guy. That's Chia is the ticker, XEH is the ticker. Other people like Algo. I really support that community because they support me and they've built a lot. I'm a lot more free form on there. It's not just condensed down to real estate.
right.
But yeah, I love the idea of building out a Discord where people can kind of chat about what sort of properties they want to see. We are opening up the floor to other investors who may have real estate or homeowners that want to list on the platform. Feel
Hmm.
free to reach us in at solslot.com. There's a chat bubble at the bottom right. You can click on that and chat directly. There's also AI built into that. It can answer a lot of questions people may have. It's not perfect, granted, but you can also reach someone on the team directly through that channel.
Got it.
But yeah, we definitely want to inspire more collaboration. So thank you for the suggestion of opening a Discord channel. I will definitely do that. All my
Awesome.
friends have one. All my co-founder friends
Yeah,
have Discord.
I spend a lot of time on Lofties. I did spend a lot of time on Landas, and that's how what helped me realize like I just pulled all my money off of there. I wasn't on there very long.
Uh,
But I just find that it's a great way to connect to other people on the platform. And what I think one of the big benefits to you is you start to get sort of like these people who I know if I go on Lofty's Discord and ask a question, there's two or three guys that are going to answer that don't work there, and they're going to have
yeah,
the right answer and be there immediately. So you kind of get these like sort of cheerleader type people who love your platform and maybe have a different way of explaining it too, because you obviously have a really like um your understanding of this is such that I think that and I have this problem in real estate too, is I think you might take for granted a lot of things in the way you describe it.
yeah,
Um, take some prior knowledge of how the world works as far as that sort of take that for granted.
yeah,
And so sometimes having someone who's a little bit closer to the ground to be like, well, this is what we're actually doing. And it might not be 100% technically accurate, but it's still the answer that makes sense to somebody. I think that's really the benefit of having like sort of those other community members. That and it just frees
thanks.
up your time, right? Like you'd look at it and say, oh, well, that person did a perfectly fine job answering. I'm not going to have to do that. So,
Yeah,
um,
no, you're 100% right. I'm a little bit of a control freak, right? So I think for me, it's making sure that, I can make sure that whatever said is really accurate, but at the same time,
right,
like that doesn't allow other people to become experts or mavens in the field. And
right.
I mean, obviously that's what you are. So I think meeting more people like you and getting more advice about how to build this out into something great. We're still in the early stages, so I'm sure we could do this again. I'm definitely excited to be
Yeah,
able to talk off
absolutely.
channel too.
Matt, it was really great doing this with you today. Like I said, I've never done this before, so I'm still gonna just do my regular sign off, and then I'll stop it and I might talk to you for a second afterwards. But all right, because I always tell people, until next time, I'm just gonna keep making mistakes so that you don't have to. And then now I'm on here, so this is gonna be an even bigger mistake because I don't know how to end it. Well, I'll just stop this recording right there.